Welcome to TradeTheMBI.com. This is John. This report is for the 19th, and we're facing the looming government shutdown, and you can see the reaction of the market has just been absolutely devastating. Now, that could expand itself. There's probably still a bit of a belief that something will take place, but I don't know that they're all that concerned about it, given where things are. There's not this instability that existed previously in the economy the last time we had a near government shutdown. So I think that's changed the overall view. But what is interesting to see is shakeout now is below that 15, and we're approaching that key line. So things are moving in a direction that, you've got the justification for a bit of a sell. You don't have the orange over plus 13 any longer. And you've got a complete reset of the steel where it's starting to come back up. But it's an interesting thing, because the situation is that if you start to break your ABM yellow, I would definitely say, given what we're seeing, it's not inconceivable that you could get a spike up here of the short, have a DOC spread at the same time that shakeout begins to decay further. But doesn't happen. But what we are seeing, though, is a reset of that shakeout, which means overbought is beginning to get eased off. Now, there's plenty of little retraces that could take place that would not be catastrophic, even to the ABM green, that would satisfy a couple of these daily positive extremes, which actually would be helpful because I think it would take away some of the stress and certainly reset the DOC and give it an opportunity to rebound. And now, obviously, as time goes by, we'll do the same thing. But the fact that you have a steel reset on all of these indicates that there's plenty of fresh capability. This, I think, is a little bit of a China-U.S. thing. I know that's not being talked about much. They're all talking about the long euro and, the theoretical spreads between, future rates. That's where the pump in the euro has been. But I really think it's a message to the U.S. about a potential trade war with China. And they're saying, hey, we'll move. They've already done it with their petrodollar that they created, doing trades outside of U.S. currency. And it's designed to be an implicit threat. But in this particular case, U.S. isn't going to fight a devaluation of the dollar just yet. I would think that if we get towards 125 here, that you may see the Fed step up. And if they do, it would be an interesting one, because it will definitely turn things around. And I think some of that's part of the dampening concerns of inflation at this particular point. Hasn't really materialized in a significant way. And, of course, I always say that's linked to oil. And oil really hasn't moved much, but it's not at a point where it's going to cause significant price disruptions yet. If it starts to climb a little more, I think you're going to definitely see down the line inflationary pressures. The interesting thing is, like I talked about, though, was the bonuses and things that everyone is going to start receiving. That's starting to be and will be the first, liquidization of all the quantitative easing that's been going on for years. So it'll be neat to see how that starts to have its impact. And of course, gold suffering, which would indicate that, obviously there's, some positive extremes right here in the sense that it's had quite an extended run. But means cryptocurrencies are back. And there you go. Off their previous lows. I think if I shrink this, we can capture the low, which was, below 95. Yeah, there we go. So everyone captured that, and that was the last couple of days of decline in gold. So we can see that inverse relationship playing itself out there, which is kind of fun to have a unique pairing that way. And from a 5K standpoint, it was just pretty much blah, and then flat weakness. We talked about the run down to the lows as you have the rising low of the Fibonacci with flat highs. You tend to want to move to the low. Now, the question was which catches to which first. In this case, the rising low caught up to price, which, in turn was really just a 50% retrace right there overall from the base move, and then it just consolidated along there, set up a few. Didn't really get much of a reset of the steel until this later portion, and it wasn't enough to really even get orange to dip below. Anyway, only now are we starting to see the potential, but you're doing it where steel is already much higher up, so unlikely to be new buyers jumping in at this particular point is really what that's pointing out. So I think you're probably going to see a little bit more systemic weakness. But all in all, given the fact that you're looking at a major shutdown, which should have, resulted in massive declines, hasn't quite happened yet, and there may still be hope. But maybe later towards the day, if things get more acrimonious and don't seem like a deal is taking place, then maybe we're going to see a bit more of a exodus, just for those to be on the safe side. So we'll keep an eye out for it. As always, post any charts as they're relevant. Trade well.